Arthur, and then tonight what we're going to be talking about is how you can get rid of that student loan debt legally. Okay, yes, legally. And what we're going to talk about is a concept that I spoke about in several other videos. If you've been following me over the last month or two, the concept of Section 609 of the Fair Credit Reporting Act, and this applies not only to credit cards but student loans. And for our community, student loan debt is one of the largest debts we have today. All right. Most of us don't own a home, or we have a used car or anything of that nature. Usually we have a 40, 50, $60 student loan debt from a degree that we're not actually making money from right now. So that's what I wanted to focus on tonight, and that's what we're going to be talking about tonight. All right. Now, as I talked about before of the Section 609 of the Fair Credit Act, this protects consumers, okay, people like you and me, from the credit bureaus and collection agencies. All right. This allows us to have some fighting power, have a chance to fight back when it comes to this. Okay. Now you say, so how do I get rid of the student loan debt? Okay. When you apply for a student loan or a credit card, for example, you're not the debtor. Okay. You're the creditor of the debt. Once again, when you apply for a credit card, all right, you are not the debtor. You are the creditor of that debt. Anybody out there understand what I mean by that? Anybody out there understand what I mean when I say when you apply, okay, when you apply for a student loan or a credit card, you are not the debtor. You are the creditor of that debt, okay? I know it's a little bit mind-bending, okay? You never were told that before, okay? So let me explain you the very uh, basics of this, okay? Now, I'm going to show you how you can eliminate your student loan debt legally. And I recently done this for a few family members of mine, some of our clients and uh, mentees that we have here at Your Business Needs, and we have great results with it. So far, we have over 95% success rate with it. It's actually is going to be my next book when I'm for uh, um, in a couple of weeks. We're dropping it on the 21st of this month. Student Loan Pro, but it comes with everything I'm gonna be talking about tonight in it. Okay, guys. So now, pretty much look at the banking system as a Ponzi scheme. Okay, that's how you want to look at it. So when you apply for a student loan or credit card, you sign your name on some sort of contract. Okay, which actually is illegal for many reasons. Okay, this is an illegitimate contract. And when you apply for student loans or credit cards, there is no money in the bank. Let me say that again. When you sign your name is the money. Your name. In America, your name is the money. So when you sign your name, there's actually no money backing in the bank. There's no money backing you. Okay, the bank doesn't have a big pool of money for student loan accounts or credit cards or anything like that to transfer. Tens of thousands of dollars or whatever was your student loan to just give to you. Okay, so here's what they do. Okay, your student loan money goes to pay your tuition. Then you pay us the interest on that. Okay, so what happens is you get the student loan that automatically goes to tuition, and then you pay the interest on that. So they're hitting you at two folds. Okay, it's basically money magically appears out thin air and out of something they call a fractal reserve banking system. Okay, we work on a fractal banking system, which means that where money is no longer backed by value. Our currency used to be backed by gold. Now it's just like I just said before, just thin air. Okay, it's thin air. So because of that banking system, is actually a Ponzi scheme, and it started about 100 years ago with big banks like J.P. Morgan and uh, Wells Fargo, the big boys of the industry, the same ones today, basically wanted to enslave you. We all are right now enslaved to our debt. That our debt keeps us where we're not able to uplift ourselves or do better in our lives because we're always wearing either to pay a debt or a bill. Okay. So about 100, like I said, about 100 years ago, they came up with this with the Federal Reserve. How many of you guys out there heard about the Federal Reserve? All right, they're out here just printing money. They're basically printing money, and it has no real value or no real course to it. Um, so by knowing this, by educating yourself and knowing this how it works, now you'll be able to take advantage of this concept that I'm about to throw to you right now. Okay. So, like I said before, what they're doing is they're just printing money out of thin air. So there's no collateral. Since there's no collateral, there's no value. There's actually no cash anywhere. So when you get a student loan, you're not getting any money, right? Think about it. You're not getting any money. Do you actually touch the student loan money? No. You're basically getting virtual money. It has no value in exchange to the banks that put up. And in fact, the bank knows this and it's legal. The bank sells the contract once you sign it. When you apply for a student loan or a credit card to something they call to the securities market. This is the big part. I want to go over this again with y'all guys because this is the crucial part right here. This is the crucial part, guys. There's no value in the exchange with the bank. Okay? And they know this. They know this. This is part of the game. The bank gets your signature, sells the contract. All right? They're going to sell the contract onto the securities market. Now, that's why you will get everybody out there that had a bill collectors call. And you're like, who is this company called? I didn't do business with them. What happens is they sell that debt. They sell the debt for pennies on a dollar. And then the collection agency who puts their fee on top comes to collect. That's how the collection agency makes their money. They're the middleman of, pretty much they come to get the money repoing. So that's how that works. All right. Now, remember the mortgage crisis. Everybody remember around 2008, 2009? This is exactly what happened. The whole thing came crumbling down. Remember the recession? I definitely do. I was in real estate at the time. I was selling land. I had a little real estate company, and I was selling land, and it just went to pieces. It just went to pieces. It just went to pieces. All right. So, anybody out there still with me? Anybody out there understand why? Anybody out there understand why using Section 609 of the Fair Credit Reporting Act, and based on the information I just told you now, how you're able to protect yourself against these types of debts, which the main one, like I said, we're talking about tonight, is student loan debt. All right. So with this basis, with this knowledge, what you want to do, you're going to be sending a round of letters. You're going to be sending a round of letters, okay? And the letters, this concept works for student loans. It also works for your credit cards, okay? And one other thing, which I just used this personally for me because I had got a ticket in North Carolina, a seatbelt ticket. I was sitting in the back seat. I was coming from my cousin's wedding, and I got a ticket for like $10, and I forgot to pay it. It was a $10 ticket, and I forgot to pay it. And I just got another letter said, "Oh, you didn't come to court." Da da da. It's like $100 and something now. And with this same concept that I'm outlining to you guys right now, it will work for most court order payments, and it worked for mine as well. I send these letters, and after a couple months going back and forth, sending each round, it was waived. Okay, so these letters work. Like I said before, so far we have about a 95% success rate. That's why we're dropping a book actually in a couple weeks. We're working on the cover and everything right now. So what you want to do is you want to send the first letter.